While Bitcoin going mainstream may have been topping the headlines so far this year, my guest today says we shouldn't lose sight of the dollar dominance. Joining me here today on StansberryInvestor.com is Mike McGlone of Bloomberg Intelligence, and he comes with his April crypto report, which is the gift that keeps on giving. Mike, nice to see you. Welcome back to Stansberry Investor.
Hello, Daniela, and thanks for having me back.
All right. Well, I read with great interest your latest report, your April report, focused obviously on the cryptos, where you say, look, yeah, Bitcoin keeps making mainstream headlines about the fact that it's gone mainstream. But with so much talk about, oh, the death of the dollar, your data showing the figures don't add up.
It's the opposite. Bitcoin's a complement to the dollar. It's actually digitalization of money, which Bitcoin accelerated, is enhancing the dominance of the dollar. And that's evidenced by one key fact. The most widely traded stablecoin on the planet is Tether. It's a digital version of the dollar. And actually, its volume right now is almost double that of Bitcoin. So digitalization of money is enhancing the value of the dollar. So you hear a lot about China trying to launch a CBDC. The way I look at it, they're just trying to catch up, partly because on an organic basis, without regulation, the dollar is winning.
So explain to us a little bit more what you found in the data that shows this, Mike.
Well, we had some data that showed payments, some coin payments, and that's clearly showing an increase in payments. But that to me is not as significant as just the trends in volume. So let's remember what Bitcoin is. It's the most unique, organically developed asset, global reserve asset, potentially ever on a world scale. It's that world reserve asset, but it's basically a collectible. You don't want to use it for transaction. Then dollar is great for transaction. It's the dominant currency, and it's great for getting in and out of. So that's been adopted organically. So we have a lot of these stable coins. USDC has actually just been Visa just said they're going to be doing some, working with the USDC, so that is increasing. And to me, it's what's happening organically. U.S. regulation will probably come in this space, but it's really not a lot in stable coins. And then you have entities like China who's trying to just catch up. And the big problem with China is not the global reserve currency; it's far from it. And they're really lacking in the key thing that supports a global currency: free flow of capital, open discourse, robust data, free capital, and good analysts that are not restricted from completely criticizing everything that happens. That's what really provides the robustness of U.S. dollar. So the U.S. dollar dominance is increasing. The key fact I'll leave you with is, despite the fact the U.S. is becoming less a part of global GDP, the dominance of the dollar is actually increasing. So to me, that's a trend that is a friendly trend. I see it accelerating.
Wow. Well, I find this really interesting, Mike, since, as you know, I've had a lot of experts on who have said that China's been leading the race, and it was the opposite, that the US has been lagging. And with the rollout of a digital yuan and no digital currency in sight yet for the US, that China was on the road ahead. So interesting that your data is showing the complete opposite of what we've been hearing.
Well, it's part of the reason I'm starting to hammer on this subject a lot more, because I hear and read and see that data, those analysis, and I say that's just clearly wrong. It makes good copy that China is trying to launch a CBDC, but they have to, because it's virtually impossible that will ever be adopted on a global scale. It's not happening. But in the US, it doesn't have to be launched by the central bank. It's already happening. Digitalization of dollars accelerating, i.e. by the volume of digital dollars on crypto exchanges. And there's one key factor is, does the rest of the world, does anybody in the world want to give up their privacy and allow the Chinese President Xi to see in everything they do and transact in, versus a third-party digital dollar like banks, like primary dealers, would allow that privacy potentially to last. I think the U.S. is smart enough to figure that out. But the key point is the U.S. dominance is actually increasing with them doing nothing. The U.S. doesn't have to do anything, and dollar dominance is increasing. So it's up to the U.S. not to mess it up.
So, Mike, I was actually speaking with my colleague, Brian Takanko, who writes True Wealth Opportunities China for Stansberry Research. And we were really having a good conversation about how the rollout of China's digital currency might be bullish for assets like gold, because if people in China can't access Bitcoin and they don't want to be part of this digital currency, we might see a flock to assets like gold. What do you think of that theory?
The one thing I find unique about that is if you're using a CBDC, a China's CBDC to buy gold, President Xi will see that. They'll see every single transaction. Not like you can get cash and use it to buy gold, which happens a lot in a lot of parts of the world, and you can put it in an underwear drawer and no one else will see it. So good luck with that one. I don't see how that happened. The key fact is Bitcoin is the biggest issue, the biggest nemesis of gold, because there's massive flows out of gold into Bitcoin. It makes sense. The world's going digital reserve asset, analog asset gold's becoming less significant. I'm not saying it's going to go down, but that's what's happening. So I don't see how more surveillance of what people do with their money in China, which is becoming more and more of a surveillance state, is going to allow Chinese people to buy more gold. I don't make that connection because maybe it will, but the government will see that. And actually, if you use it to buy gold, the government will know exactly how much you're buying, where, and from whom.
Good point, Mike. But I guess the point is, perhaps before the rollout of the digital currency, whatever paper money they still have, will they flock to gold?
Well, that's a key point. If you can, and a lot of that paper money is doing everything they can to diversify from the yuan. Bitcoin's a great way, but obviously that's been restricted. Tether is a great way to get to the dollar. That's restricted. Exchanges have been pushed out of China. They've restricted it. So it's a unique thing I find about China. It's very anti-Bitcoin, and it's a good indication of why, because they have to be. They have to be afraid of their currency. They don't have free open markets. In the U.S., I think it's smart enough to embrace it. Like this is a complement to the U.S. digital reserve currency, which is a dollar, and then there's the digital currency. I mean, the U.S. reserve, the global reserve currency, and then there's a digital reserve asset, which used to be Bitcoin. Used to be gold, still is, but Bitcoin's really moving into that space.
So, Mike, let me ask you: when people say, well, central banks are the biggest threat and is the biggest threat to Bitcoin. We've seen what China's done to Bitcoin, and we'll see this happen with other central banks. Is that a threat for you?
I think it's the opposite. Central banks are some of the biggest holders and buyers of gold ever, certainly the last few years, and they know that chunk of gold they're holding is starting to become less valuable because of this digital version Bitcoin coming there. So I think within the next 10 years, we're going to see central banks being prudent and simply allocating some of that gold wealth to Bitcoin. It's happening with normal people. It's happening with a lot of prudent investment managers and portfolio managers. So why not central banks? To me, it's a matter of time. What's going to stop it? I don't know. That to me is a key question. Why should these trends end? I look at it as a strategist. They're more likely to accelerate unless something significant pushes it back, some kind of banning, but it's already too late for that. And China's already tried to ban it. Other places are trying to ban Bitcoin. And this is an open source, decentralized network and the largest network on the planet. It's kind of hard to ban something like that. And you're going to take my Bitcoin from my thumb drive? Not me, but most people. So I think it's the U.S. is smart enough to see the trends and listen to astute analysts like me and say, maybe we should just let this thing happen. And by the way, there's a lot of jobs, a lot of opportunities, a lot of wealth being created in this country because of Bitcoin.
Well, central banks trading in their gold for Bitcoin, Mike, I could guarantee you that would make major headlines if that were to be true.
Well, it's been predicted. Seyfedin Amos, in his book, The Bitcoin Standard, I initially read it a few years ago. I thought, no way. And every day that goes by, I realize this makes logical, prudent sense. You have 100 units of gold. If you don't allocate 1 or 2 of those units to Bitcoin, I think you're at greater risk of not doing it if Bitcoin just continues to do what it has been doing.
And Mike, I just want to dig a little deeper here into your April report, since there's a lot of good findings, one of which shows a rapid adoption of crypto payments to merchants into everyday life. Global crypto payments left 1.6 billion in the first quarter of this year alone. This is that according to Coin Payments. No stopping this chain in sight, Mike?
What does it stop? What stops it? I don't know. Now, obviously, some of that was accelerated because of COVID, but people just don't use paper money anymore. To me, it's like the transition from gold coins and things to paper money, gold certificates. Now it's going digital, and to me, that's just a natural trend that's inevitable. That's just going to accelerate on a global scale. And there's a key reason. First of all, think of transactions with the credit card. The merchant or the credit card gets 2 to 3% of every those transactions. And in a zero rate world, that doesn't really make a lot of sense. And then you have the things like when you transact in the stock market, T plus 2 days and blockchain, and it's going to help in cryptos, and digital dollars should help push that back to T plus 2 hours. It's just a matter of time, unless we expect the world to go backwards. And I think COVID kicked in that suddenly stage of that gradually then suddenly mantra of adopting rapidly advancing technology.
All right, good stuff. Mike McGlone of Bloomberg Intelligence, thanks so much for joining us.
Thanks for having me.
And thank you all for watching. And do not forget to sign up for the premier event, the Battle of the Assets, gold versus Bitcoin, Bitcoin versus gold. It's Frank Justra and Michael Saylor, only here on Stansberry Investor. You have to sign up to get premier access. Go to DanielaCambone.com. It will air on April 21st and will definitely be a must watch. I know Mike McGlone will definitely be watching. Thank you all again. In the meantime, keep following us on StansberryInvestor.com. That's it for me. I'm Daniela Cambone.